Collins & Co.'s not-for-profit conference, Be Empowered Through Knowledge, is designed specifically for the not-for-profit sector. Our speakers are experts in this sector, and their practical approach provides not-for-profit board members and management with the opportunity to improve their skills and knowledge across a range of specialist topics. The conference also provides a great networking opportunity.
Good afternoon, welcome back. I'm the presenter of Recogniser NFP in Distress. My name is Ryk Eksteen. I'm an audit principal of Collins & Company. You see a bit of me today, so I look after about 150 charities and non-for-profit, so it's really my specialist area, and it's something that I really enjoy working in this space. So what we're going to talk about is basically financial sustainability risk. We're going to talk about whether you should have a surplus or a deficit. We're going to talk about the importance of revenue recognition, the importance of accurate employee entitlements, talking about cash, and talking about the various considerations for the management and the board. And we're also going to see if there's any questions. I'm happy to take questions as we go through. So there's a couple of indicators that a non-for-profit may be at risk of not maintaining their financial sustainability. So you continue to operate deficits, and it's an ongoing process. It's year after year. You have negative operating cash flow. Your ratios are poor. You're not budgeting, accurately, and your monthly management accounts is inaccurate. You regularly lose your key staff members. Your board aren't that interested, or they're a bit hands off, and I guess a lot of the control of the charity is in the hands of a couple of key people. That could be a problem, and you're struggling to attract new funding, new programs, or you're not delivering the services as you promised. So I guess a question that comes up a lot is whether a charity or not-for-profit should make a surplus. And I know a lot of the time people like to run at a really small surplus or a small deficit. But I guess if you look at the results of a company or organisation at the end of the financial year, it can tell you a lot of things, and whether they delivered the programs they should have delivered, whether they recognise all the expenses they should have recognised. It can also mean that you may have had a good year and that you actually now have money put aside to actually expand your range of services and actually use that surplus to actually fund some extra services. So there's a lot of changes in the Australian accounting standards since, the 1st of January 2019, which for most organisations would have kicked in from the 1st of July 2019, which is ASB 15, which is the recognition of revenue from contracts with customers, ASB 16, leases, and ASB 1058, which is income for non-for-profits. I basically covered all three standards extensively in the last two conferences, so those videos and notes are available if you are looking for that. But that's really the key development in Australian accounting standards and changes probably since the introduction in 2005. So when it comes to recognition of revenue is basically to understand, what is the purpose of the funding, whether you're receiving that funding to fund your operations or whether you're receiving the funding for specific projects or specific services that you need to deliver. And that really basically guides you how you need to recognise the income. So under ASB 15, which, revenue from customers of a contract, there's 2 points where you look at recognising revenue at a point in time, which is or recognizing revenue over a period of time. So if you recognize revenue at a point in time, it normally has to do with goods, or if it's like, I guess, a fee for services arrangement. But where we talk about recognizing revenue over time, it's a lot, you actually are getting, transferring services to your customers, or it's like where you are contractually obliged to deliver like 1,000 hours of services to people, like childcare to a low-income socioeconomic group, but that you get a funding over a period of 2 to 3 years. So that can have an impact how you recognise that income. So point-in-time recognition is where you recognise where the money, it's where the control over the funding goes across to the customer. So we deliver the goods and you give it over to them, they paid you, so that's their goods. In point over time, there are 3 examples what it can be. It can be where you deliver the service and at the same time the customer basically uses the service, which is basically like counselling services. It's where you receive funding to create an asset, and where that control and where your customer controls the asset that you create, which is like for IP, or even like if you get some funding from the federal government to do a building and to build a building, and then that building actually belongs to them, but you are entitled to use that building. That would be one of those instances. But also a question, you don't recognise the $10 million up front when you receive the money. You're going to recognise that income as you actually incur the cost of building the building. And then other instances where you are paid by the third party to create something like a report. But if that process takes longer than a financial year, then you're going to have to look at recognising that revenue over time. So there's 2 ways of when you recognise revenue over time. There's the output methods and the input methods. So output methods could be, okay, I guess that's probably an example. If you produce, you are supposed to deliver a certain number of hours, like 1,000 hours. You're supposed to deliver a certain amount of goods. It could be depending on the milestones in the contract. And the input relates to what expenses have you incurred while you were doing that project. So you get $10,000, and when you, I guess, applied for that funding of $10,000, you provided a budget. So as you go through the process of delivering the project, then you can compare your cost with the budget, and then you can recognise your revenue based on that principle. You also can look at basically I guess, depends on how things are measured. It could be measured on the fact that your staff need to spend a certain number of hours with the customers, and that you can recognise it based on that way. Or also basically maybe there's a certain number of like hours allocated to, like on the, for example, the India East package, where the customer are entitled to 12 hours of palliative care, that you can always see, okay, how much of those hours have you used up, and recognise your income that way. So in the last 12 months, I've been involved where I've been asked by the board or a peak body of a number of organisations to come out and look at a certain organisation, because there was basically concerns over this organisation using crowdfunding to raise funds to fund the operations. So I was basically asked to perform like a health check on the accounting information and see what assets do they have, what liabilities do they have, is everything on the books, and just basically get a bit of a snapshot at a point in time, in this case for the April, of where the organisation is at, and then also to do a cash flow projection till the end of June, and then basically prepare a report of my findings and recommendations to the board. So it was quite interesting because it turned out that they received some income probably back in 2008 in relation to like a certain project from a department of, for example, social services, about $50,000, which were earmarked for a certain project. It never got completed, but it looked to me at the time when I did an investigation that this revenue was probably recognised in the year in which they received it as revenue. It also turned out that they were unable to pay the staff entitlements, like the annual leave and long service leave. They were going to struggle to pay the GST, the super and the pay-as-you-go, and that the organisation was trading insolvent with the board members at risk. So I actually recommended that the organisation be wound up. The key thing that went wrong here is basically that the way that this organisation recognised the income was there was no matching. So they didn't say, okay, I'm getting this money for this purpose, so when I actually fulfil the purpose, I can recognise the income. The money came in, they recognised the income and moved on. So this had an effect that their problems were hidden for a long time. So they had cash in the bank, but they actually, in reality, they didn't account for the revenue correctly, so their liabilities were understated, as well as the fact that the long service leave entitlements were calculated incorrectly, and there was unrecorded long service leave liabilities for casual staff. So there was a lot of things that had gone wrong here, basically because they didn't recognise the revenue in the right way. If they recognised the revenue correctly, they would have realised probably 5 years earlier that they had a problem and they were going insolvent. So this whole problem was hidden by the fact that they recognised the revenue incorrectly. And it wasn't just a one-off situation. I think 3 years, I think in 2016 they got a grant for something, and then they recognised it in the 16th year, and then actually incur the expenses for the project in the next year, and it's just a perpetual problem. And I guess this whole issue really came home to roost when they spend the money on on an asset that didn't comply with council regulations, and they realised they had no money to pay their ongoing expenses as well as to pay the staff. So in the end, they got wound up. So that's why I'm saying it's really important to know that you have accurate employee entitlements, that you know exactly how much you owe your staff. And it's also good to have make sure you've got all the records that are required, and especially I think a really key thing is the start date and then the hours of employment, and then also for as you go along with the employee's career, that you keep track of their rate increases, and I guess that at which pay point they're paid, and all those type of things becomes really important. I think I talked about that. So it's really just to ensure that all your records are complete for your employees. Hours worked. The hours worked becomes really important from a calculation of entitlement position, especially for long service leave, where for casual and part-time employees, we look at what is the highest average of the last 12 months, the last 5 years, or the total duration of employment. And it can get really tricky when this person has been with the organisation for a long time, and you have to go back to when they started, and you most likely won't have that information. Also, it's important to keep leave records, as you know when they've taken annual leave, personal carers leave, long service leave, because you want to ensure that you actually calculate their entitlements at the correct number of hours. I'm not covering everything on the slide. I'm just working through and do things. When you get to leave, you can't cash out long service leave. You can only pay an employee out when they leave your employment. But for annual leave, you can cash that out up to 4 weeks of annual leave with the agreement of the staff member, and you need to give them, I think, 12 weeks notice. So I guess the things that you really need to keep track of as a small or medium-sized entity is really what is the start date, what is the hour work per year, what is the pay rate, any time taken as unpaid leave, and the termination date, and all those things. And I would also say any rate increases, and I guess any consideration behind those rate increases is the fact that they're now jumping from pay point 3.1 to pay point 3.2 because they've been there in a year and they've satisfied all the conditions, and it's just really, a small motivation narration about why there was a rate increase. Because I've seen instances in the past where there weren't regular rate increases, and then you get, complaints. And I actually had a whistleblowing incident a few years ago surrounding people that didn't get a regular increase in their pay rates. So it's really important then that you have that support to say, okay, this person, didn't performance wasn't up to scratch, so that's why they didn't move up to the next pay level. It's really important then. I guess everybody will know about the implementation of portable long service leave in Victoria from the 1st of July 2019. It does not apply to everybody. It's in the community services. I will deal with who are covered and who are not covered soon. From the 1st of January, it also applies to people provide services under the NDIS as well as childcare. So there's a lot of things that are covered, and it's really dealing with people living with disability and who are vulnerable or disadvantaged or in crisis, like training and employment support, financial support, accommodation, home care. There's quite a long list here: neighbourhood houses, community legal services. So it's really, if you haven't looked at this before, I really urge you to look at, do you need to have your employees registered under this Act? Sometimes it's just not applicable, as I asked one of my clients, and they came back and say, we looked at it. And then I said, great, that's the way to go. But then I know that Neighbourhood Houses Victoria have done a great job getting all their houses on board and getting everybody registered. So it really it can be quite interesting, and it's quite a wide range of people that are covered by this. So it's something I would recommend you look at and to make sure that your organisation, even if one employee delivers that type of service, it may be something that you need to look at. It may not be everybody. It may be in certain organisations, your management may not deal with the customers, may not be part of the service delivery, but then you've got your caseworkers or other people that deals with the customers and the clients, and they are the people that need to be on it, but maybe your bookkeeper don't have to be on it, or your manager. But it really depends on who deals with the customers and the clients. As I said, from 1st of January 2020, the childcare workers needs to go on this. That will be for-profit as well as non-for-profit. And then people that deliver services under the NDIS. So that could be where you could have one person that are responsible for that one service that you deliver under NDIS, and that could be the person that needs to be on this. So there's always a couple of definitions. So what is a what is a community services worker? So it's a worker in community services under portable long service scheme. It's a person employed by a defined community services employer where person delivered services or personally perform activities that are community services work. So there's a lot of things here that got a definition, but if you go back to the long list of community service work, that will tell you, are that person involved with any of those different services. And if you call the portable long service leave benefit scheme, they're quite helpful as well. So although you may get a different answer depending on who you talk to, but they are quite helpful. I would recommend it. If you're unsure, I recommend you give them a call. So what's going to happen now is, okay, so the not-for-profit is going to be responsible for the long service leave entitlement up until the 30th of June or the 31st of December, depending on when they join the scheme. And in my view, the organisation, especially like where your award is more generous than the standard 0.8666, the organisation will be responsible for that 0.5 difference in the award. Cameron, is that your understanding as well?
They put out a statement saying that they'll cover any amount, which is achievable. So no, I agree with you, that's the case. So we've had Napier House's provision for the balance that we have over the statute. So we're doing what you said, but they've made that sort of statement that regardless of what the EBA says, they'll cover, which means you can make an EBA that has any long service provision and they're just going to cover it. So they're revisiting. The Act was repealed in October, so it's in consult again this year, so hopefully they'll do it.
Yeah, it's not all, I guess I did have a look at the information available, and I think only one of the Business Victoria website actually say explicitly that if the person leaves before the end of June, then even if they've been there 6 years, they lose their long service leave. So that the bit that they were there before the introduction of the scheme, they lose that, which wasn't very clear to me before, or from any of the other things around.
Yeah, that's part of the problem, was the regulations attached to the Act are ambiguous and just worded very badly. Yeah.
So I think, thanks Cameron. So there's a lot of information out there. There's a lot of uncertainty out there. I've 2 clients that claimed under the scheme so far. I just haven't heard back from them exactly how that works. So I'm very interested to see what that happens. Yes.
Maybe you still not progress, but I'm a little bit first. So the effective date is 1st of January this year.
No, 1st of July. Depends on the
July this year.
19. So it's already in play.
Okay, so if somebody, let's say, if an organisation had not been registered yet, but they will register within this financial year, then will the legislation take it backdated to possible?
Yeah, they need to register back from when it started.
Okay, and then if someone, kind of leave within this financial year as well, what can happen?
I guess So if you're under the scheme, you take your long service leave with you, and there's certain conditions which you need to meet and able to stay in the system. I think it's like you need to be employed within 4 years, so it's quite generous. But yeah, it's a question whether you need to know whether you need to be recognized, you need to be registered, and then you need to register all the employees that qualifies, and then if that such a person leave after that, then they are in the system. So you take that little bit, 6 months with you, whatever, you take that with you.
Sorry.
Yes.
So what about if you're going to be for 6 years and you're going to leave the industry? When's your super go nowhere? Is that right?
Yeah, that long service leave. I guess if you leave, I guess it depends on the timing of when you leave. So if you were 6 years with the organisation, and at the end of June, then you go on a portable, you're only going to qualify actually. So you're going to lose that 6 years, because if you leave before the 7 years, you will lose that 6 years. But you will be entitled to a portable bit. But if you leave, you're going to lose it. Sorry.
So if, as an organisation, so now we have employees and we have the long service leave, which is there.
Yeah.
So do we have to then give all that money to the employees?
No. So you still accrue in your books up until the end of June, and that whatever's the over the 0.866, as long as they're with you. And then in theory, when that worker takes long service leave, you can then claim back some money from the long service leave scheme. In my view, is probably at this stage, most of the long service leave people will take will actually be pre that scheme. So I don't know how much you're going to get back from them. It doesn't make sense anyway. I don't know if that answers your question. Yes, Michael.
The greatest confusion, you touched on it before, is, our organisation. I'm in management. I have absolutely no direct contact with the service users, so to speak. So where do I sit? Do I just stay and let my organisation worry about my portable?
That's my view on that. Yeah. No, you won't have portable because you won't be on the scheme. You will just. I know you've been there a long time, so they in it for a longer run, but yeah.
Oh, I own the company now.
So the biggest liability. No, it's so you probably won't be on the portable long service leave scheme.
But this is the misinformation that's out there, and then we've heard definitions like, if 70% of your work is or over is with the service users, you're on it. If you're in administration, you mentioned bookkeepers. When you get a chance tomorrow, do you want to give Mike a call and just check that we've got the right people? Because it is an impact, as you know.
Yeah.
This is now, before we were as NFPs, that money we were putting in, as you know, provisions, which was a nice bank balance sitting in the bank that we didn't touch and that earned interest, and now it's going out every quarter to this mob who, after 4 years, if they don't return to the industry, get to keep the money.
That's right.
So it's really a disadvantage then of the sector. And I'm still trying to get something definitive that says, Michael, the bookkeeper, the managers, they're not delivering services, they don't need to be on the portable, but I have not got anything definitive that says that.
So that's why it's repealed. So the Act has been repealed entirely. It's in place as a just sitting there for the year, and they're meant to open it up for consultation now. They haven't got that. But part of the problem is that they had narrow definition of service provision, so face-to-face only. And we queried them about that and spoke to them, the teachers union as well, and community solicitors also, and agreed that most of the work that's done is done not face-to-face, but the inputs to do service delivery is significant. And they had to recognise that yes, that's the case. So that's part of the feedback that they've been getting from community centres, neighbourhood houses, teachers unions. So they've got that community centres repealed themselves. So now it's about trying to get as many voices as possible so we get clear regulations on who is included and who isn't. Part of what we've asked for is that everyone is included unless there's a reason to exclude, because it just makes admin burden for each not-for-profit to go, now we have to do split liability for long service leave and maintain it for 10 years, when ideally it would be like a super or SGC style contribution where you pay it particularly, and it's their responsibility to take it from there.
I'm just saying, there's a lot of people working in the industry who work on projects, short-term contracts, short-term contracts, all that sort of stuff, they're the ones that get a benefit, and I really think that this is what I would do. So if we can get everybody in it, but I get it actually, I agree 100%, there was a loss of the public money, but I do actually think this is better for the industry in the long run because of the nature of the work.
Yeah, so just on the cash stream, at the moment you're earning less than 1% in that bank, the CPI is 3%. So you're actually getting in debt as you hold that reserve to what you're going to be paying out at the end of it, so there's no benefit in holding money. Yeah,
If they leave before their long service leave's due,
That's true.
it's money agrees now, we had to give them money.
Which so the purpose of the Act to start with was to provide that provision to and to sector, and it was cleaning as well as security, where they've historically missed out because of the nature of those organisations. And that was the purpose behind the Act, and it's been missed with the regulations.
Okay. Thank you, Cameron. Cameron from the Neighbourhood Houses Victoria, which I was saying doing such a great job on that, informing his members. So yeah, there's a lot of uncertainty clearly in the sector. I think I told my clients at the end of June last year, I don't know enough what's going on, they don't know what's going on, so let's stick with what we know and then I guess reassess this year. So hopefully by June this year we'll be in a better position to have more clarity on what's going on. So then, also during the last 12 months, I did also a bit of investigation of there was a bit of complaints of mismanagement of a non-for-profit. So there was some misappropriation discovered by the manager, and we were asked to perform a health check once again to just see where this organisation is at from an asset point of view, from a liability point of view, and also to verify the amount of misappropriation by the manager, as well as to calculate the employee entitlements and also do a report. So, and this it got really interesting. So what we found is the manager did, we basically quantified and basically confirmed the amount that was misappropriated by the manager. We could establish the known liabilities at a certain point, but we couldn't actually calculate the employment entitlements because there wasn't enough information there in the records of the employees to actually work out what was the number of hours worked over the years. Sometimes the start date was a bit iffy whether they started as a casual or started as a part-time. There was just not enough information there. There's also instances where the staff haven't got any increases for a number of years under the award, but even then, this not-for-profit was in quite a healthy financial position even after paying back the staff the money owed and things. It's a bit of a different kettle of fish than another one, but I think it shows the importance of accurate employee entitlements. So what went wrong here? So the committee was pretty hands-off when the manager ran the show, which was not a good thing because he gave himself a few bonuses at travel allowances. Cash checks came into play, especially I think the last 2 years while I was there, so it was quite interesting. I think it was only signature on the checks. Once again, there was incomplete employee records. Not all the staff had contracts, and it was also really limited communication to the staff of the entitlement. So I think they had no idea how much sick leave they accrued, how much annual leave they accrued, or long service leave. So that's a bit of a mess on its own. Then talk about cash is king. So turnover is vanity, surplus is sanity, and cash is king. So it's always good to have cash in the bank, and that's my clients love cash in the bank. So it's a question. It is important because it means whether you can survive or you can't survive, and it's something that should be there. It's not something that's subjective. The money should be in the bank. If there's $100,000 in the bank, and the bank says $100,000, there's $100,000 in the bank. So it's something you can't dispute it. It's a fact, unless you fudge the numbers. But let's not talk about that one. So what does cash also mean is if you ensure that you record your liabilities correctly, you know as you put certain money aside for projects, you put aside enough money for your employee entitlements, and whatever's left over as a surplus, I guess there's a decision whether you want to invest in expanding the services. Do you need to pull back? Do you need to build that up a bit? It's good to look at what is the net current assets position of the entity versus the current liabilities, and whether that's a positive position to be in. And can you meet your debts? And that's something that went wrong in my the first case study where they just didn't have any money left. So in conclusion, there's things that you need to consider as a management and a board. I guess it's important that you prepare accurate management accounts so that you can make informed decisions about the activities and the future expenditure. It's really important that you prepare an annual budget, which includes a cash flow projection, because a lot of the time when you look at a budget, it's either like a profit and loss, and if you're lucky you get a balance sheet, or and that basically say, okay, I'm going to spend $12,000 in rent and I'm going to split a rent over the 12 months and put that in, and you realize my cash flow looks quite different from what my P&L looks, because I'm spending $3,000 every third month for rent and that type of thing. So in my view, you should probably have like a profit and loss that's linked to a cash flow projection, that's linked to a balance sheet, that really gives you an accurate picture of where your cash flow is at, because that's really important. It's also important to review your grant and funding agreements to make sure you recognise revenue in the correct way. Make sure that your staff entitlements are calculated correctly. I think it's important that you have skilled board members on board with financial knowledge, legal knowledge, maybe HR knowledge, so that you get a good mix. It's also good to consider your non-for-profit's finance. Where does the money come from? Do you need to diversify and go into new type of services? I think you need to ask your questions of your accountant and auditor, that they are confident where the numbers have come from. If they don't know, nobody's going to know. And if you're not our client, you can always ask us to perform a health check, and that will just give you peace of mind that things are done correctly. What we do is we look at, just have a general check of that things make sense and all the reconciliations make sense. I don't know if there's any questions. Time for a drink then. Oh, sorry, Michael.
You could have had a .9 there, and those good governance measures. You know, giving a manager a checkbook, most NFPs under the Corporations Act should be countersigned by 2 board members.
It can, or I guess part of the problem is you can get people that sign blank checks. So, any further questions? Thank you for coming. We will, I guess, have the closing remarks downstairs in the ballroom again, and there will be prize draws as well as some after event drinks if you want to stay behind. So we really appreciate you coming to our day today. So thank you very much.